Hello guys, Brian here. Can you guys hear me okay? Just give me a yay or nay. Just loading up my YouTube. Just get. YouTube. So let me get rid of that. We're just getting started in a couple of minutes. I'll get my shared screen up. Okay, so not sure if anybody can hear me. I got one person on the Ed. Thanks for coming on out. Okay, let me just get my YouTube up and running with the chat. Okay, I can see it. Hooray, hooray, hooray. Okay, we are up and running. Okay, so give me a minute and I'll get my shared screen up and running. All right, so let me make sure I'm in the right directory. We'll be with you in a minute. Okay. Okay, I'm going to be finding what I need. Okay, so I just ran my data a few hours ago. So we got what we're focusing on. I've been showing the Word document, the report, the last number of weeks. I just did another one today. And let me just get on with my sharing. Where is the sharing option? Start a video. Hold on here. Share screen. Okay. Let me know if you guys can see the screen okay. And we are now live. Okay, so right now what you're looking at is my spreadsheet that I have my scripts generate over 315 pairs. Now, of course, this hasn't been changed in the last little bit, a couple of months actually. So I will have to update this, but that's minor. But you can see here we have 313 rows in the spreadsheet. That's how many pairs that we've got available. So I wanted to go over the data that's generated from this. As I said, I've talked about my report, this one right here, and that has been talked about numerous times, but haven't really dedicated a lot of time to this spreadsheet. So if you have not seen my spreadsheet I've developed for Dukascopy, it's a little similar, or the premise of it's similar, but there's a lot more data in here. All right, so I'm going to go in by column and walk you through it. So as you know, the only time frame I'm really watching is daily data. That's the only period I'm really interested. I'm not really interested in anything else due to noise in the markets, and could easily throw off my analysis and forecasting. The only time I'd probably go in intraday is via just to confirm something, different theories, momentum, or I don't know. There's numerous examples I could give you. So I pretty well focus on daily for now and make daily calls in the hope of we'll talk about this afterwards, the watch list, which is quite important. That I'll be using to put on to watch as a guide for positions. So here we have our Fibonacci values. This is really only, let me just pull up my spreadsheet or my Word document here. And I'll show you which chart I'm meaning. Where's my Acrobat? Okay. All right, so the chart I'm referring to when it comes to the Fibonacci flag really is, just find it here. Every pair has this, this type of analysis. And here we have Fibonacci lines. So we use daily lines, and all we care about is that the closing price is within what they call the golden range, between basically less than 3.382 level. And if it's less than that, we can say it is within that golden range of valuation. And that's what I like to know about these currency pairs, if they're overvalued or undervalued. And that's how I do that, by looking at the historical pricing and look at, so this is since the inception of the cryptocurrency pair. And this is since day one. And we can historically see where, if it's overvalued or undervalued. In this case, it's somewhat undervalued. That's just due to the markets are pretty well hammered right now in the cryptocurrency space for the last number of months. So going back to the spreadsheet, that's what fib value means, if it's within our golden zone. The next one is the buy signal. So the chart I'm referring to here is essentially the signals that I generate up here for each chart. So here we have moving average crosses. We have different periods, namely SMA 5. It's a very simple one. And we're just looking for basically a 5-day moving average if it's crossing. And if it does, obviously, then we have a buy and sell signal. I used to put a lot of emphasis on this. I don't as much, because it can be a false flag. So that's a definite. But it's helpful. But usually out of the ones that you see that are generating this port are usually within the last trading day have a buy signal. Okay. So the next column is a sell signal. So the difference is obviously if there's a sell signal here in this chart the previous day, but I don't really track it because in Binance we can only long only, and there's no shorting at all. So here's an interesting one, the HS difference, which is the head and shoulders difference. So if I look at the report, both pairs that are listed in the report right here, they do have head and shoulders generated. So here what we're referring to, if I could find it, there is one I know. See if I can find the head and shoulders. Don't have one. Okay, maybe I could pull up an old report or something. Let's see, maybe this one here. Pull up this old report. Maybe I could show you an example of head and shoulders. This is a very long document. It's probably a couple of 100 pages. So this is a 6 meg of file, a Word doc, and it's going to be quite a length of time to. Oh, there we go. Okay, so if I look up shoulder, so what we're referring to here, as an example, is this chart here. Let me see if I could scrunch this puppy down. Okay, so what I'm referring to here is essentially we have our head and shoulders here, we have our neckline, and then we have our price, and it breaks through that neckline. Then what happens is we have two dots here, the green and the blue. Basically, the this column, which I'm not sure if it's useful, but it can be. So this HS difference is the measurement between the green dot, which is the expected move of the price before it starts to maybe potentially go back down. That's the, as I said, that's the expected price move, and that is calculated. If I can find my other report. So this neckline is generated by obviously the shoulders here, and then we also have our peak in one of the shoulders, and then that difference between here and the neckline and here and that same peak is that's the expected price. So if we see that break through, that price and the difference between that and the neckline is this HS difference that I've got highlighted here in the column right here. So that's what that means. Trend difference is the measurement of the slope. In my case, let's see if I can find the trend. So this right here, this measurement, if it's negative, it's a downward slope, meaning it's losing. And if it's up, positive, meaning obviously it's profitable over the long run. And then the measurement of that slope amount is a reflection of upward momentum, meaning profitability. Obviously, the volume here represents the latest volume in the latest bar that I capture that's downloaded from Binance. So this is an important factor as well, because obviously a lot of the coins out there are manipulated. So this is one of the ways to filter out those bad coins or cryptocurrency pairs that can be manipulated. And as a result, that means you have to find a threshold. So here we have Bitcoin US Tether at 19,000. And, you might see some other ones. So if I do a sort, actually, I shouldn't do that, but you'll probably see some cryptocurrency pairs at 30 million, 40 million, whatnot. So you have to find that threshold as part of the report so that you'll potentially trade on. I've done mine here, as you can see here, at 1 million or 10 million. 10 million is pretty safe, but what I've noticed over the last number of months, the volume's been dropping in the cryptocurrency space. So for instance, you could easily say that Bitcoin was traded at 50, 60 million a day. Now I just saw last week it was only 30, so it's dropping. So obviously there's fewer people in the space trading, or at least in the world of Binance. So that's a definite factor that you need to keep your eye on in terms of volume. Momentum is pretty basic. If you have any questions, just let me know. I can always answer them. Just check my Zoom. No questions so far. No questions. Okay, so knowing that, I'll continue. Okay, so in the momentum, how we do that is pretty simple. So here we have our statistical normalized distribution. So these are daily returns for this particular pair. Since I think these are in the last 1,000 days. So, well, it's basically, I can't remember the period, if it's 1,000 days or it's quite big. So these are the number of daily returns that have either been, in this case, negative 0.4% for a daily move or positive 0.4, but obviously it's going to be a higher bucket worth of returns closer to zero. But you can still kind of get an idea that there is more negative returns in this particular pair. So obviously you can confirm that by looking at the trend, which is obviously that we have a negative trend as a result of these negative daily returns. So that's one measurement. Okay, so then we have our standard deviation. This is important because when you get pairs listed on this report, what I like to do, let me just pull up the other one. Okay, so what I like to do is, in this case, we have 3 pairs of quote unquote interest to potentially trade. And what I do is I put the group volatility, the group volatility, the average, the mean, as well as the average of the volume. So what I do that for is then you can kind of compare that average volume, that average volume against the ones that are generated here in this spreadsheet. So it's just another way to say, are you dealing with a currency pair that is more volatile than the group average of what's interested to trade? The next column is, we call this the harmonic bullish harmonic pattern. And basically, when you look at the report, you'll find that some currency pairs have the ability to generate these harmonic patterns. So in this case, we have a bullish, sometimes it'll be bearish, and it's just to confirm potential market reversal. So here's the latest price. It senses that there is this past pattern, harmonic pattern, and as a result, it's saying it's bullish. So if the market's down, we can kind of confirm that there is an anticipation of bullish activity in the next few days. Okay, so that's what this means, and this is the exact chart, and you can get the description of the pattern, bullish butterfly, out of Binance. And then we also do the same thing in this particular column here for the bearish as well. Now these are new. These are all brand new. I've added in the last 2 weeks. So before I tell you what they are, I got to define them. So from a mathematical standpoint, what these new columns, I guess you'd call them, is we have slope, which is the slope of, and I'm doing regression, mathematical technique to find the average using drawing a straight line. Then we have the intercept. That's using no different if you were in math. In my case, it's called relational functions. The simple calculus formula, y equals mx plus b, which I believe M or B, one of them, I'm not a mathematician here, one of them is the intercept. So that's what this means, the coefficient of that intercept, which isn't really all that valuable, but I don't really track it. But I do track the slope, okay? And that slope is no different than the momentum or the trend difference right here, okay? It's similar. But this is the actual mathematical calculation of that formula I just stated on what the slope is. The higher the slope, the more profitable that particular cryptocurrency pair is. Then we get into, let me just show you the definitions here. Okay, so the next one's R value, the correlation coefficient. This is just a measurement to say, is the relation between X and Y valid? And I don't get into this in a lot of detail, but we do have a link here that explains that relationship. If you have, let's say, a high p-value and a low p-value, how do you interpret that and what does it mean? Is there any validity in the relationship of the regression line? That's what it means from a mathematical standpoint. The p-value is a two-sided p-value for hypothesis test. As a null hypothesis, is the slope is at 0. It's another way of saying if you follow pair trading, it's another way of saying what are the probabilities? Is this a valid relationship in the pair between the cryptocurrency pair, and is there a valid relationship there, which means that it correlates, I guess is a right way to say it. That's why I don't get too deep in this. But if you need to know, you can go to this link, and that will explain that perfectly to you. And then the standard error is the estimate of the regression line, if it's valid or not. So the lower the error, the better, more confidence you can take away to understand that relationship of the regression line that's drawn or the measurement of the slope is valid. So the lower it is, the more validity and more confidence you can have that slope is accurate. So yes, that is a lot of information, I do realize, but that's why I put it in a spreadsheet. Some people may use it, I don't know. Okay, so we have our slope, R value, P value, and then the standard error. Then this is the standard closing price, the last closing price from the bar last downloaded from the exchange, Binance. Then we're dealing with some new stuff I just put in as well, these trends and these momentums. These are important as well because it just, call it triple verifies these trends that we're looking for. And I'm using a totally different Python package to enable the calculation of that. And then we also, from that, we can measure trend. We can also measure momentum as well from a mathematical and a data perspective at great detail. If you go to my blog, what I've done here is for this, what I've done here is I've enabled, this loads up. So actually, just find the right article. So the name of the article, I'll just look for live overview. Name of this video. Yeah, on my blog here at quantlabs.net/blog. What you'll find here is a complete set of details I've added to this posting. So let me just pull it up. Okay, what you'll find here at the bottom is I've included the definitions, the slope, intercept, R value, and P value, what I just showed you, and the standard error. That's the link to go to see the code. That's in Python. The other thing that I've included here, which I'm about to show you, is this trend 17 to trend 21 and different momentums. Momentum 1, momentum 2, and momentum 3. And this is just another Python package. Where's my, there it is. It's just another Python package that I'm using to determine those calculations. So if you go to this GitHub repository, you'll find the examples. This is another technical analysis library. And if you go to the bottom here, it shows you how to get it up and running. But what I'm doing here is I'm using this line to calculate this data here. So all of this is calculated from that example in that TA Python package that I got here on my GitHub repository. Simple, but the way to interpret these ones here can go in many different ways. You can easily see the, oh, and I should also say these are the mean of the period that I'm calculating. And then the period I'm calculating, I do believe, is over 30 days. And it's a short-term trend. So it's not a long-term trend like this one right here in the very first chart that I showed you. These trends and momentums are very, very short-term, 30 days. Okay. And so there's 3 different ones that are calculated using that Python package. And actually there's 1, 2, 5. And then there's 3 different ones for momentum. So you can interpret those as you see fit, because each column will be different, but I don't put a lot of emphasis on it, except when I'm calculating the different pairs that come up, that show up on this report here. As I said at the beginning, we have 3 pairs. We've got buy signals for TNT, BTC, WTC, Ethereum. So there's 2 pairs here that I'm using in this report. And yeah, so that's what I'm doing to calculate the short-term trend. And yeah, and then between those 2 pairs, or in today's generation, we've got, actually, is that today? No, that's July 7th generated for that period. And let me see if I have the report that I generated. I'll pull up the report from today. So that would be today at 5:38. So let me pull that up. So this one today generated how many pairs? 3 pairs. And I did a video on this. So 3 pairs have been generated. So when I go in to generate which is the best out of these 3 pairs, is using the short-term trends and volumes I just showed you in these last series of columns. So I'm actually putting a lot of emphasis on the short-term trend and momentum of 30 days. And that's how I'm able to determine potential optimal pairs that you could put some capital on. And there's other phases I go through. So in this case, what I'm doing is, I'm going to be adding, let's say, let me just pull up that report. So let's just say hypothetically, we have 3 pairs. Out of these 3 pairs, maybe one may be added to a watch list. And I just started talking about my watch list, which will be next week's topic. So if you go to my YouTube channel, we'll cover this next week. Next week, what we'll do is, this is the actual file used to generate. So this video here called video. So this latest video, what market entry point conditions for tough cryptocurrency market and what indicators to use. And from there, we have a series of indicators that I can use to add these pairs and add them to the watch list. And these indicators I'm pointing out right here are to be used to say, yes, we'll use those indicators that work 100% of the time, that have a high reliability factor, and they will, in fact, can be used to put market entries on. So in that post, I put up that same corresponding post here. Let me just pull it up. Oh, okay, let me just find that link right here. So if you go to this post right here called, again, what market entry point conditions for tough cryptocurrency market, these are the 4 to 5 indicators that you can use. So in this video, it's 20 minutes long. Right here, I talk about consistently what seems to work is using as an entry point potential is the breakthrough of the price of the head and shoulder neckline, as I showed you. Also, we have long-term trend, which can be broken based upon the price. Another one that I've been watching as an example here that really works really well. Let me just pull up the chart here. Okay. Right here. This is a good example. So right here in RSI, we have our undervalued asset or a cryptocurrency pair. This one, WTC Ethereum, hit a period of undervalue. As soon as it goes back to 30, look what happens. We have our price value, it pops, and it slightly trends up. This seems to work. You can also watch the momentum here to make sure that it exceeds at least 0 and it's positive, because that's another way to say, yo, you have a very likelihood of a market entry to make some money. In this case, a very tiny amount, but this seems to work consistently. Okay, that's all from my analysis. Also, see, as I say here, maybe the moving average cross for a buy signal. I can't say if that's 100% working, but it's a factor that you can use. But I put maybe, and as I said before, I put a lot of emphasis on it. It just doesn't seem to work as well as these other ones. The other thing that I'm going to be using is once a position's put on, I am going to use the cryptocurrency pair and would like to see outperformance versus a standard benchmark like Bitcoin versus US dollar. It's no different if you had a stock and you want to make sure that that stock is outperforming the S&P 500 as the benchmark to generate alpha. This is no different because you want to make sure that cryptocurrency pair is outperforming the Bitcoin versus US dollar. And that's pretty well it. And I want to focus on that next week. And I'm hoping I have some examples for that in a simulated mode. But once I get that working, that is going to be the crucial file to watch for market entries. And then there's an exit equivalent, which will be using ATR. So when you put on a position, you have your positions, and then you're just going to purely watch the price using average true range to close the price to exit. Because that seems to work, and that is universally accepted as a closing or exit strategy indicator. So that's pretty well it. Let me know if you got questions. Okay. Nope. All right. So I'll hang out for a little bit. Let me just check my other one. Okay. I'll just wait a couple of minutes, see if there's anybody out there. Okay, I'll do it once, twice, 3 times, and we'll call it a day. I knew this was going to be a short one. Hopefully you got any questions or comments, let me know. Going once, going twice, going 3 times. I guess we're done. All right, thanks, and hopefully I'll be online next week for the watch list, and hopefully have some working examples for you. All right, we'll talk to you later. Thanks for coming out and being part of this. Over and out.